If you are a W-2 worker who wants to increase your wealth, then it is incredibly important for you to use the money in your paycheck very carefully. Today, I'll explain to you exactly what to do with the money in your paycheck when you get paid. I'll also answer a question from one of my subscribers. Without further ado, let's dive in. Number 1, cover your necessary expenses. First things first, you have to make sure we allocate enough of your already existing paycheck to cover your necessary expenses. So make a list that contains all of your expenses. On this list should be things that include rent, mortgage, food, utilities, and insurance. These need to be on that list. Only include expenses that are necessary for your survival. After you make this list, add up all of those expenses to get a total. For example, if you receive a paycheck of $2,000 every other week, and if your expenses for this period are $1,000, then you are going to put away $1,000 immediately to cover these expenses. Anything else we do with the money in your paycheck will come after this. You always need to make sure that your baseline expenses are covered. That is why we address this first. Also, keep in mind that if you lower your baseline expenses, the more money you'll have to spend on other things when it comes to you getting your paycheck. So if you can reduce your baseline expenses by living in a smaller apartment, having roommates, buying a less expensive car, we have to consider doing this. Ideally, you want to get to the point where your essential expenses do not exceed more than 50% of your paycheck. If you can get it less than this, even better. Then this will give you more room to put money elsewhere. Here's number 2. We're going to start paying off high interest debt. The reason why this is so important is because high interest debt is killing you, and it can make you much more significantly financially richer if you started focusing on killing it. I am going to talk to you seriously right now. The average credit card interest rate in America is 22.8%. This means that if you fall behind on your credit card payments, you could spend far too much money playing catch up. Dealing with those high interest rates can make it feel like you are swimming against a strong current when you're just trying to get ahead financially. Listen, I know how it is. I got into a credit card debt situation myself when I was 26 years old. I spent a lot of money on traveling. I spent a bunch of money on cameras because I was trying to start my business, and I had high interest debt. And I had this revolving payment that I was looking at every single month. And I'm like, okay, if I just throw a little bit more at it, but I never did. And so the debt just got bigger. It went from $22,000 to $23,000, from $23,000 to $24,000. Eventually it got to $26,000 where I was like, okay, I didn't even have student loans and I'm creating debt for myself that I can't control. So I am going to have to put a stop to this and start focusing on paying this off. This is something I want you to avoid. When it comes to paying off debt, I recommend using the avalanche method, which emphasizes focusing on paying off the debts with the highest interest rates first, and then moving on to the debt with the next highest interest rate second. This can help you to pay less interest overall and get your debts paid off faster compared to other methods. The percentage of your paycheck that you allocate towards paying off these debts is going to depend heavily on your personal situation. If you have a large, high interest rate debt, then I recommend allocating a higher percentage of your paycheck. If you have a lower amount of high interest rate debt, then you can allocate a smaller amount. But as a general rule of thumb, you should focus on making absolutely sure you keep up with the minimum payments. And if possible, make payments that are larger than the monthly minimum to get the debts paid off faster. I wish I would have done this when I was 26 years old. Let's look at an example so you can see what a difference it makes to pay more than the monthly minimum payment. If you had $5,000 in credit card debt with 22.8% interest and your monthly minimum was $195, it would take you approximately 3 years and 9 months to pay off that $5,000 debt, and you end up paying around $3,100 in interest on that life of the loan. But if you increase your monthly payment to $250, it would only take you about 2 years and 4 months to pay off the debt, and you would pay only $1,650 in interest. So in this case, you could pay off the debt around 17 months faster, and you would save approximately about $1,450 in interest by raising your monthly payments. So hopefully this gives you an idea of what you stand to gain if you increase your monthly payments on your high interest debt. Strive to allocate around 5 to 10% of your paychecks to paying off high interest debt. Okay, let's move on. Step number 3, contribute to an emergency fund. It's not that hard. If you do not already have an emergency fund, then this is a good idea for you to start one today. An emergency fund is a fund that can pay your living expenses for at least 3 to 6 months in the case of a job loss or emergency. You should only use these funds for genuine emergencies. Otherwise, the funds might not be there when you need them if you have genuine emergencies, such as a large unforeseen medical expense or if your car gets totaled. You can also keep your emergency fund in a high yield savings account. This can help it to keep growing over time, even after you stop contributing to it. I would recommend designating 5 to 10% of your paychecks for this purpose until you have enough money saved up. Then you can put this portion of your paycheck into other categories. All right, step number 4, we're gonna start contributing to savings. Just as you should build up your emergency fund savings, it is also a good idea to build up your regular savings. After all, no one likes to look in their bank account and see a bunch of zeros. So I recommend saving at least another 5 to 10% of your paycheck. Just like with the emergency fund, you should also put this into a high yield savings account. If you go with a traditional savings account, you'll most likely get significantly less than 1% in interest. However, with a high yield savings account, it's possible to get interest rates up to 4% or even more than that. So look at some high yield savings account options and choose the one that is best for you. Here's step number 5. Now it's time to make investments. This is where it starts to get more fun. If you want to increase your net worth, then investing is a great way to do so. There are many different ways to invest, and the one that is right for you depends on your preferred investing style, your risk tolerance, and your end goals. Different types of investments can include real estate, precious metals, stocks, bonds, cryptocurrency, oil and gas, even private equity, and collectible arts count too. But one of the safest investments that you can make is an investment into the S&P 500 index. This is because these investments tend to return around 7 to 10% annually, much lower levels of risk involved here. Keep in mind that if you want to invest in stocks and bonds, you can do so in a highly tax-advantaged way by opening a Roth IRA. With a Roth IRA, you invest with after-tax dollars, then you can withdraw completely tax-free in retirement. Many people become multi-millionaires by investing in these accounts consistently throughout their careers. Then, when they reach retirement age, they are able to enjoy millions of dollars of tax-free wealth. So consider opening a Roth IRA if you don't have one yet. I'm also a huge believer in real estate. Just like Roth IRAs, real estate investing has great tax benefits. For example, with real estate investing, you can get a write-off for the entire rental property structure through the depreciation deduction. You can also write off a wide array of other expenses such as repairs, maintenance, advertising, you name it. You can also use tax strategies such as the short-term rental strategy or the real estate professional strategy to create active losses on the tax returns to offset active forms of W-2 and 1099 income. You can learn more about this strategy right here. So when it comes to tax-advantaged investments, Roth IRAs and real estate are two of the best options. However, there are other investments that have great benefits too, including traditional 401ks, traditional IRAs. Oil and gas investments I would put in that category, as well as crypto mining. If you like to learn more about the tax benefits of oil and gas investments or crypto mining rigs, then feel free to book a consultation with our team. We'd be more than happy to share with you some of those strategies. Investing is not a one-size-fits-all type of thing. One investing strategy may be perfect for one person, but not make sense for another person. But the main point is that you should be dedicating a portion of your income towards investments because you want to get your money working for you. The more capital gains and cash flow you can generate, the better off you will be financially. And also, don't forget, most importantly, to invest in yourself. You should always be looking for ways to become more knowledgeable, more skilled. So think about investing in courses, seminars, private coaching, mentorship. Even though I'm a multimillionaire, I still regularly look for ways to invest myself, and you should too. I recommend spending at least 10 to 15% of your paycheck on investments if possible. If you can do more than this, even better. All right, guys, number 6, personal expenses. This can include things like buying clothes, jewelry, taking vacations, going out with friends and family, expenses that are not essential, but that add to your quality of life. We all deserve to have some fun in life too. So if you have some money left over after the first 5 steps are done, then consider allocating a little bit of this now to you. Just don't overdo it. You see, as you start to build wealth, you should have more money left over for this category. It is 100% true that life can get more enjoyable when you start making more money and have more to spend on personal expenses. For example, I went on a trip to Bahamas, which was about $100,000 trip. We stayed on a beautiful boat. We had tons of crew people supporting us. I had my family on the boat. It was a wonderful experience, but I would never spend that type of money on a vacation if I hadn't already made tons of investments that could even pay for that type of vacation. Obviously, early on, a nice Hawaii vacation spending $2,000 to $5,000 was ideal for me, right? But now that I'm making multi-millions and I have multi-millions in investments, yeah, spending $100,000 on a vacation of a lifetime, doing something that I normally would never do, creating an experience of a lifetime for my family, was the right type of investment for the memories that I wanted to create. Now, let's talk a little bit about paycheck allocation. Now, I want to show you what paycheck allocation can do for you. John is a construction worker who receives $5,000 per month in his paychecks after taxes. Using my formula, this is how he should spend his paycheck. Necessary expenses, $2,500. Paying off high interest debt, $400, emergency fund, $250, savings, $400, investments, $750, personal expenses, $700. So there you have it, an example of a paycheck breakdown using my recommendations. Hopefully this gives you a better idea of how to spend your paycheck to set yourself up for success. I know I wish somebody would have created this video for me. Now, once you finish your emergency fund, you can allocate that 5 to 10% of your paychecks to personal expenses, so you can have a little bit more money to spend on yourself. Also, remember that you should always be looking for ways to increase your income. If you can increase your income, you can spend more money in each of these 6 categories that I mentioned today. Now, what I want to do is answer a question from one of my subscribers. This question was asked by SSALX on my benefits of starting an LLC in 2025, top tax write-offs for new LLC owners video. Make sure you check that out right here if you haven't seen it. The question was, Karlton, I came across a video that mentioned S corporation versus LLC. According to his info, it seemed more beneficial tax-wise doing an S corp. What is your opinion on S corporations? My opinion on S corporations is it depends on your situation. For most people that have active businesses that are self-employed, we switch them over to S corps when they have around $50,000 in net profit, because I've done the math a million times to determine that it makes more sense to pay payroll taxes than self-employment taxes on all of your business's profit. Plus, when you cross over and you become an S corporation owner, you get a deduction for when you place yourself on salary. That could be beneficial in the long scheme of things as your business looks to scale. But of course, we always want to make sure that we ask these questions with a tax advisor in mind. So be sure to reach out to our team if you have any questions. My name is Karlton Dennis. Thank you so much for watching this video. You can do something for me. Like, comment, subscribe, and share this with one other person that is looking to build their wealth in 2025. Look forward to seeing you on the next video. Cheers.